The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone, and Happy New Year. This is Tony Butler with Insurance Agency Marketing Services. I'm the Life Sales Director here, and I want to thank you guys for joining us for our first webinar for 2020. Today, we are going to be going over one of our more popular webinar in our webinar series, and this is going to be with Mutual Trust Life. Kip Walker is going to be talking about infinite banking and the infinite banking concept. So excited to have that discussion with you guys here the first of the year. First and foremost, need to do a couple of housekeeping items for you guys. You guys will be in listen-only mode. If there is some time left at the end of the webinar, we'll open it up for a couple of questions that you can email or type in messaging, and we'll try to get those answered for you. So, IAMS Business Builder. We understand that as agents, a lot of your business comes from referrals, and for us, referrals are a big part of our business. You as an agent, if you do refer an agent to IAMS, and that agent gets contracted with one of the carriers that we work with, we will provide you with a $50 referral bonus. We also reward you for any subsequent business that they submit with those carriers. We give you 20 basis points on the business that they do submit. Just our way of saying thank you for referring the business. And please note that it doesn't take away from the commissions that they're receiving. It's just our way for us thanking you for helping us build our business as well as build agents' business. If you have any questions regarding the referral bonus, please give us a call. Our new producer builders. If you're familiar with IAMS, for new producers, if you are a new producer, we do provide 3 different levels to where you can get additional, I'd like to say, prizes or bonuses, if you will. If you look like, or if you think that you're going to write at least $100,000 in business, we do provide you with either a $750 cash bonus, a 2-year producer website, or a free iPad. If you'd like to bypass the $100,000 level and shoot for the $300,000 level, we do provide you with either a Social Security program and a 3,000 piece mailing. You can get $2,000 in marketing reimbursement dollars, or we provide you with a $1,500 piece of gift card. Now, if you'd like to shoot for the $500,000 level and you do achieve that, 1 of 3 things that you can receive in regards to that. It could be either a 5,000 piece mailing and seminar coaching with Matt Gill, who is one of our top producers, or you can get a 4,000 piece mailing and seminar coaching with Dave Pemper, who is also one of our top producers. If you just like to treat yourself for making all that commissions on $500,000 in business, we do offer you the Ritz-Carlton travel package. If you have any additional questions regarding our new producers builders, again, please don't hesitate to give me a call. Next, back office support. We like to save you time in what you do because we know your time is valuable. So what we like to let all our agents know is we want to help you work smarter, not harder. So we provide you with paperless contracting, top sales expertise coaching. Also, for you life agents, we do provide you with the ability to go to our website and run, whether it be term life quotes or universal life quotes. We do provide the ability to, for your annuity agents, for us to run quotes and do case design assistance for you as well. If you have any questions regarding our back office support or you need assistance with any of this, please give us a call. Next, we do have a creative marketing solutions department. Now, our creative marketing solutions department provides a wealth of assistance regarding either turnkey solutions, agency solutions, or digital solutions. What that means is they can help you get ready to print customized, professionally written cards or handouts, flyers, or newsletters. If you're looking for agency solutions, meaning you're looking for a logo design for your company, or you're looking to redesign your logo. You're looking for stationery business cards. They can assist you with that. Digital solutions, if you're looking to get into online marketing area, they can help you with personal website development, digital marketing strategy, social media consulting, um, e-marketing consulting, online newsletters. So if you have any questions regarding any of this, please give us a call and ask for our Creative Marketing Solutions department, and they will be able to answer any questions that you have, provide any assistance that you do need. We also have a 24/7 website. I know a lot of FMOs, IMOs have websites, but I would like to point out that with our website, it's always accessible. You can obtain forms online. For you annuity agents, there's current annuity news. We do have an annuity product grid. We also have a long-term care product grid. We do have, like I mentioned before, a term quoter on our website, but you are also able to do universal life quotes and excellent sales tools. So if you need any assistance regarding navigating through the website or have questions in regards to the website, don't hesitate to give me a call. I would love to kind of walk you through what's available on the website. We also provide our agents with a retirement analyzer. Now, the retirement analyzer we do offer free for the first 30 days. Um, Marcus Solar is one of our annuity sales directors, and he's kind of our subject matter expert in regards to the retirement analyzer. The retirement analyzer helps you as an agent answer questions from your clients, such as, can I continue my present standard of living into my retirement years? When can I retire without running out of money? How would it affect my family if I were to die prematurely? Again, as I mentioned, we do offer it on a 30-day free trial basis. After that, there is a cost to that. However, if you are an agent that produces at least $250,000 in either annuity or single premium life production, we do provide the analyzer to you for free. So if you have any questions regarding the analyzer, give Marcus a call. He can provide you with additional information and answer any questions that you may have. We also have an IAMS wealth management team. The wealth management team, I think, has been in existence a little over 2 years. It's headed up by Charles Jr. What the wealth management team does, it can help you increase your revenue, improve client retention, and strengthen client relationships. And what I mean by that is if you have clients, higher net worth clients, with more investment assets, this can help you find that additional business with those clients. So if you have any questions regarding the IAMS Wealth Management Team, or you have some clients that may fit this criteria, please give Charles and his guys a call. They'd be more than happy to help you. Now, if you are familiar with IAMS, you know that we do have a Life and Annuity Academy that we put on probably once a quarter, and it's a 2-day training that we pay for, meaning that we pay for the travel, we pay for the lodging and your meals. And what the 2-day Life and Annuity Academy does, we talk about different sales ideas and strategies. We do have some of our top producers guest speak on this. We talk about different wealth transfer tools, the industry's best income riders, business insurance concepts. Sometimes we do partner with some of our top carriers, and they go over some of their products, sales ideas, and concepts in regarding to those products. So I know that we're going to be doing a Life and Annuity Academy here, I believe, in the spring. Once that information becomes available, we'll definitely get that out to you. Now, if you want additional information regarding our Life and Annuity Academy, I do have a polling question that I'm putting up here. If you could respond to that, I'll make sure to get additional information out to you. And I'll leave this up for a little bit because it looks like a lot of you are interested in getting more information. Okay. All right. I'm going to go ahead and leave this up for just a little bit, and then we'll close that down. Okay, we'll go ahead and close that down. Okay, Kip, are you on?
Yes, sir, I'm here.
Okay, I just got a message from someone saying that there's no slides. Are you seeing the slides?
I am.
Okay. All right, just wanted to make sure. Okay, just a couple of quick slides to go through, and then we'll get started on the infinite banking concept. Okay, we have a few trips coming up in 2020. We do have the IAMS Athene Marketing Summit that's going to be July 1st, or excuse me, August 26th through the 29th. Invitational period is from July 1st of 2019 through June 30th of 2020. For more details, please give us a call in regards to our producer social and educational event. We also have a couple of other trips that are going to be happening in 2021. First, we have the Paradise on the Pacific. It's an IAMS Marketing Summit. That's going to be in Puerto Vallarta. The qualification periods are from July 1st of 2019 through December 31st of 2020. Qualification requirements are 3.5 million in production, and that trip will be March 7th through the 11th of 2021. We also have the Shores of Serenity. That's going to be in Punta Mita Elite. That's going to be from March 11th through the 14th. Qualification periods is the same. The minimum requirements for qualifying for this trip is 6.5 million production. Now, if you do 8.5 million, you do qualify for both trips. And again, any additional information that you need on these, please give us a call. So with that, I am going to turn this over to Kip. So I'm going to make you the presenter, Kip, and
All right.
let you get started.
Okay, let me go ahead and click, and there you should see it now.
Yep, I see it.
Okay. All right. Well, thank you very much, Tony. It's always a pleasure to be with IAMS on these presentations, and this is a powerful concept. The word is starting to get out, and by the attendance on this call, I think that's proof that it is, and that this concept does work. This is a great way to start your year if you're looking to introduce a new source of revenue into your practice. If you don't use whole life and you want to get into that market, this is an excellent way to introduce whole life. It's 35% of all premium out there, 35%. So if you're not offering whole life, you're not fishing in the whole pond. So we're going to help you start to fish in the whole pond today. And Tony, as I go through this, I kind of move around a little bit. So if my volume isn't good or anything, feel free to chime in and let me know.
I can hear you.
I'm not going to make.
So you're good.
Okay, perfect. I'm not going to make anybody an expert in IBC in 20 minutes, or an expert in anything really in 20 minutes. That's not the purpose of this presentation. The purpose is to show you that this concept works, that you have clients who you can help with this concept, and then you know where to get that help for your clients. Those are my three objectives on this call today. So take notes, think of clients in your book of business, on your calendar, on your desk that fit the profile that we're going to go over for this concept. Write those names down, and that'll be our basis for moving forward and making sure they're not wasting our time here today, because we don't want to do that. We're looking for ways to grow your business, and this is a way you can do that. So I want to make this as impactful as possible. So we'll take a look at the infinite banking concept. I'll give you an introduction, and then we'll look at the history and the client profile and how mutual trust supports this concept, and a very, very impactful and quick way for you to implement this concept. IBC has been a fantastic strategy, but only fairly recently have we been able to develop it as a powerful selling system, and we have that now. So I'm going to talk to you a little bit about that towards the end. Mutual trust has been around for over 110 years. And from the very beginning, we wanted to stay focused on being the best at one particular area in life insurance and not try to be all things to all producers and all clients, because then you turn out to be best at none of them. So instead, we have had a singular focus on whole life insurance, participating whole life insurance. We are a participating whole life insurance carrier. We actually trademarked the name The Whole Life Company. That's what we do. I mean, yes, we have some term, and that is available 10, 15, 20, and 30-year term, and that is offered as a opportunity to convert into whole life down the road. So that is our focus. And this quote from Edwin Olson, one of our founding members, kind of says it all. We can never be the oldest company. We do not want to be the largest. We must always be the best. And so that is what Mutual Trust strives to do, be the best in participating whole life insurance. Now, the company was founded in 1904, and we were a small, standalone, scrappy insurgent company for 105, 106 years. And we've been going along very well. At that time, we were rated A- up until a few years ago, A- by AM Best and Fitch. And even though we had 6 times the capital that we needed, the reserve, 6 times the reserve we needed for an A rating company, we just were too small. And so we found out that, you know, everybody hates to hear size matters, right? Well, size matters, especially in the life insurance industry. So we were doing well, but with the difficult interest rate environment, while we had paid dividends for over 110 years straight, okay, that's powerful, but we were getting hit in the dividends area. Now, at the same time, around 2015, we were talking to another mutual company, Pan American Life. Now, Pan American Life is a mutual carrier. They have a different focus, however. They focus internationally, primarily, on group and international life insurance. Very powerful carrier, or a very good-sized carrier with a powerful set of products that they offer in group and individual and accident and health domestically. So they had the international group, they had the international life, they had the domestic group, and they were missing that fourth component, the domestic life distribution. So they had a decision to make. They could either spend millions of dollars and build their own channel, or they could go out and merge with another carrier with similar values. That's where we came in. So at the end of 2015, Pan American Life and Mutual Trust merged. We are now roughly 25+% of their revenue. We are now a part of a $6 billion company, $6 billion in assets, $1 billion in capital and surplus. It's more than that now. These are a little dated. And within a year of that merger, that same company, that same ratings company, AM Best, that said we could never be an A company, gave us that A rating. And if you know anything about rating agencies, they don't get out of their car in the morning in less than a year. So that was just a testament to the power of this merger, the success that this merger has created. And we're also rated A by Fitch as well. So it really is the dawn of a new day. Starting from 2016 until now, it really has been an explosive time for Mutual Trust. We grew by 12% in 2016, 17, and 18. 2019, we grew by almost 30%. That's in a market growing by 1%. We have a lot of things going on. It's a very exciting time, and I want you to be able to participate in that growth with us. Then we can all make more money. Infinite banking concept is a concept that we have partnered with for many years now. We've really become well known in that space, and we are very much a big niche player in that infinite banking space. And as we start to talk about infinite banking, I think about, what are we doing? What is the concept? How does it work? And I like this quote from Robert Kiyosaki. He was the Rich Dad Poor Dad writer. And his quote here, it's not how much money you make, but how much money you keep, how hard it works for you, and how many generations you keep it. And that kind of says it all about infinite banking and really about mutual trust overall, because this is what we're trying to help your clients achieve. Generational wealth. the ability to give your money, your dollars, more than one job to do and build their own wealth. And there's better ways to do that in addition to other ways to do that by preserving what they are earning instead of trying to get 1 or 2 percentage points more on their investments and introducing more risk into their portfolio. So all of those, it's important to have those other investment opportunities. I'm not saying that, but infinite banking can be the foundation of an overall financial plan, and really is the foundation of any successful overall financial plan, because it makes everything else that they're doing in their investment, in their financial lives better. It makes it work better. And so that's kind of what we're doing with infinite banking. This is not a new concept. J.C. Penn, Walt Disney, Ray Kroc, Doris Christopher, they all used infinite banking, and these were whole life policies because UL didn't exist at that time. They all used their life insurance policies to help finance their businesses. J.C. Penn used it to make payroll during the Great Depression. They used cash value whole life insurance. Walt Disney, when he was trying to start Disney World or Disneyland, I can never get those straight. When he wanted to start Disneyland, he was tapped out. His creditors would not give him any money. So he turned to his own whole life insurance policy and started Disneyland or Disney World. Pampered Chef, Doris Christopher, she started Pampered Chef in her garage using a policy loan. She later sold Pampered Chef for $1 billion+. So, I mean, this is not a new concept, but what we are doing is we are bringing it to the masses, so to speak. There is a large market for this, and I'm going to show you that in a few minutes. So what is the infinite banking concept? A financial principle based on U.S. tax law and insurance contractual guarantees. What does that mean? Let's flush that out a little bit. What it does mean, though, is an opportunity. We have an opportunity there to take advantage of those rules and laws. Infinite banking concept deals with access to capital. Access to capital is key to financial prosperity, and that's true for individuals and for business owners. And business owners really get this concept because they definitely understand the importance of access to capital. Where are they finding their capital right now? If they're not saving it somewhere, then they are going to a lender. They are getting loans to have access to capital. Let's assume they have it stored somewhere. Let's assume they're keeping it in an account. So some of them are. So is it liquid enough when they're storing? Are they putting in an account that's liquid? They can get to it when they need it. They know it's going to be there when they need access to it. That's important. They need to know that it's guaranteed. They need guarantees because this is capital that we're going to rely on to take advantage of opportunities that come along or emergencies that come along. So we need to know it's there. Is it taxable? We can really take a look at the implications of taxes and how it erodes our wealth. And if we can recoup just some of those taxes, that can be an important part of our financial plan. Is it leveraged? Meaning, is it doing more than one job? All right. Is it providing additional value? And then will it still grow when they're using it? And that goes to more of the strategy of how they're using that capital than to the account that they're putting it in, as we'll see. So in many cases, this money now is being kept in CDs, certificates of deposit or savings accounts. They're guaranteed. They're accessible. With the CDs, you may have some issues with the accessibility there. Savings account, though, very accessible. Not really a huge rate of return on those, but that's not important, but still it's a part of that equation. They're keeping it in money market accounts, spending efficiencies, which, to be honest with you, I don't know why that's in here, or cash. Cash is, there's limits to what you can do with that. You can't just stick it in the mattress and then what are you going to do? And then it's being eroded, its value being eroded. So this is where we're primarily seeing this capital being stored, primarily savings accounts and money market accounts. They're accessible, they're guaranteed, but they're also getting taxed. I mean, they're earning maybe 1% if you find a good deal, and then Uncle Sam's kicking you in the teeth at the end of the year with a 1099. And they're not really doing providing any other additional benefit. All right, they're getting taxed, they're getting a very low rate of return, but they are guaranteed and accessible. And those are two very important parts. But we feel very strongly that participating whole life can be a much better store of this capital. Guarantees are there, provides the certainty that they need. With whole life, and in particular, Mutual Trust Horizon Value whole life policy is designed for this concept. You have cash value growth growing at a guaranteed rate of 4%. Okay, that's a gross rate, yes, minus mortality and expenses. But you also have immediate access to that money. So you have that liquidity, use, and control. This policy is designed to provide high cash value growth by adding a paid up additions rider. If you're not familiar with the paid up additions rider, it's kind of like the cash account in an IUL or UL, but it maintains all the guarantees that whole life is known for. So if you design the policy, typically it's a 60-40 split with the premium. 60% of the premium is going into this pay up addition rider, 40% is going into the base. Now the base cash value is going to grow more gradually, and it's going to have substantially higher dividends, especially in the later years. The paid up additions rider provides cash value growth immediately, and it is extremely liquid. So if you put $100, for example, of premium toward the paid up additions rider, you immediately see $94 showing up in cash value. That $94 grows at 4% and compounds annually, plus earns non-guaranteed dividends. And again, we've paid dividends for over 100 years straight. We actually were the only carrier to substantially increase our dividend scale in 2016 and maintain that scale to this day. So in a very difficult environment. So, we have a great track record there, but a lot of that growth in the early years especially is coming from our guarantees. As a matter of fact, if you match up our guaranteed cash value in our policies versus any other carrier out there's guaranteed cash value, we are head and shoulders above their guaranteed cash value plus dividends in the first 6 years plus. And that's important for a very, that's great for a very important reason. That means they can start using that cash value immediately. If you use an IUL or a UL, you've got to wait a couple of years before you even see cash value in there. With the whole life policy, you can get going right away on getting and helping these clients redirect some of the interest that they're paying away from themselves back into their own pocket. And again, there are no surrender charges ever with whole life, no penalties for accessing those funds. So if the client doesn't understand they have a problem, it doesn't really help to have a solution, right? So what is the problem? Well, business owners need access to capital. That's one thing. That's very important. That's key. You can't really take advantage of an opportunity if you don't have access to capital. If you need to purchase inventory or need to buy new equipment, you need to have access to capital. So that's one very important thing. Debt. We are drowning in debt as a nation. And there is more to be gained by preserving our wealth than by recouping some of the interest we're paying away from ourselves unknowingly and unnecessarily in many cases than there is by trying to chase a higher rate of return. Now, again, we want to be going out for those rates of return, those higher rates of return with that particular money that is allocated for that. But you also need to have the ability to save money and put it in a safe place and stop spending away your wealth when it's not necessary. How do we deal with the limits of qualified plans? If I have a 401k or I'm putting money into an IRA, that's great. What do I get when I do that? I get a tax deduction, or I don't have to pay taxes on that, right? But when I finally retire, what am I going to do? I'm going to access those funds for retirement and I'm going to pay taxes on them. I don't know what those taxes are going to be. The idea out there is that we are going to be in a lower tax bracket when we retire than when we're working. Is that really the case? Country's $22, $23 trillion in debt. Taxes are historically low. I don't know what's going to happen in 10 years. Let's take that concern off the table and redirect some of those funds into an infinite banking concept policy. How do we keep more of what we make? And I've already alluded to this. How do we stop spending away those taxes and interest? How do we recoup some of that money? And we'll talk a little more about that. coping with life's emergencies. Do banks want to give you a line of credit when you really need it, when you've lost your job, you're sick, and you can't work? With whole life, the IBC concept, you have guaranteed access to capital. Guaranteed. It's in the contract. And it doesn't matter how much money you have in the bank at the time. It matters how much money you have in the policy, but it doesn't matter how much, what your income is. It doesn't matter. You can get that loan. You fill out a one-page form, you send it in, and that's it. You don't have to get, spend a month on a process that's supposed to take 2 weeks, or really 2 months on a process that's supposed to take 2 weeks, trying to get a home equity loan, and the rate they offer you is gone by the time you get approved. And believe me, I'm speaking from experience. It's just a one-page form, boom, you get your money in like 3 days. So I've kind of already mentioned this, but what do you think is the biggest financial problem facing Americans, the average American family today? It's retirement. How are they going to save for retirement? And oh, by the way, maybe help their kids go to college. I know as long as I'm alive, I'm going to make sure that my kids can go to the best colleges they can get into. They're going to be in the safest cars, and I want to give them the best head start I possibly can in the future. So there are a lot of families out there facing these same issues. How do we help them navigate this? Finance charges, as I've already talked about, and this really illustrates the point, 34.5% of every dollar is spent on interest. This is the average American household. You see, the interest rate is important, but look at the volume of that interest. Look at how much each payment is going toward interest. With autos, 5% car loan, and you have a significant amount of each payment going to that auto loan. Look at housing, about 83%, especially in the early years. 83% of every dollar you spend towards that home, that mortgage, is going to interest. We are drowning in debt. Our financial houses are on fire. Infinite banking concept can help address that issue and help clients be able to save more money. And some of you may be thinking, well, how do they save more money? They're only saving 5%, as I'm showing you. They're only saving about 5% of their money. How can they possibly afford to do more? They can do it by finding money in ways that they're spending money in ways they don't need to be spending it. And believe me, they can find the money. It is there. I mean, we're not talking about people who don't have 2 nickels to rub together. We're talking about, as I'll talk a little bit more about, people who have some disposable income and those who have a lot of debt. These are clients that love this concept. And there's a lot of them out there. And when I say have some money, some additional money, we're looking at households maybe with $70,000 in household income. All right, so we'll talk a little bit more about that. But what we're able to do is find that money and show them how to be more efficient and recoup some of this interest that they're paying away. Don't you think there is a lot of opportunity in trying to recoup just some of that 34.5%, just a little bit of it, than just trying to offer another client another 1%, another 2%. I can get you 7%, 12%, as Dave Ramsey likes to say, on your money. How much risk can I introduce into your financial plan before you hate me? Okay, we're telling a different story, and by telling this different story, you can organically grow your business. And I have seen it over and over again, and I'm telling you that this is the concept you want to take a look at. And I don't want to get ahead of myself here, so let's keep going. Volume of interest, as I mentioned before, you have 83% of your mortgage going toward each payment. So what does that mean? Over 20 years, you're paying $306,000, the average American family, $306,000 in interest over 20 years. What if I could recoup just a third of that? Even less. It would be very impactful with these clients and with the average American. And when the numbers get bigger, the concept still is the same. It's just bigger and bigger numbers. So it doesn't matter if you're talking to somebody that has that $70,000 a year income or somebody who has a $2 million a year income. The result is it just makes the numbers bigger. That's it. So it works for a broad swath of people. One of the keys, powerful keys of the infinite banking concept is the idea of how we are financing purchases. Because you really are financing a major purchase, whether you are taking a loan from a lender or you are taking money out of a savings account and using that money to buy the product, all right, the whatever it is, the asset. Maybe they need a new skid steer. Maybe they need, maybe it's a guy who wants to, expand his business, or somebody needs to remodel, what have you, anything. If it's not something they can pay out of their monthly income and just, the income that they have designated to use every month, if they can't use that, then they're financing. That's what they're doing. These are large purchases. So just as an example, if I have a savings account, or savings account, let's say, and it's earning 5%. Just, I know that's a lot, but let's just say for argument's sake, 5%. It's $10,000. Sorry, $10,000 I have in this account, and I want to buy a car, and I have a choice of taking the $10,000 out of my savings account, or I can take a $10,000 loan at 5% from a lender. And let's say I'm going to pay myself back over 5 years. So if I take it from the savings account, I'm going to pay it back over 5 years. And if I take the loan, I'm going to pay that loan back over 5 years. If all things being equal, if the client pays the savings account back or the lender back at the same time, or in the same time frame, the cost is exactly the same. The only difference is one is draining down to zero to try and get back to that $10,000 over 5 years. The other is dropping below the zero line and trying to get back to zero. So are those really the only two ways that we can finance purchases? And by the way, when you drain the money out of an asset that's earning interest, compounding annually, that's where the cost is coming in. Albert Einstein once said that compounding is the eighth wonder of the world. If it's that powerful, and he was a pretty smart guy, if it's that powerful, how often do I want to interrupt it? Never. I never want to interrupt it. So how do we do that? What is another option, a better option for financing purchases? You collateralize, okay? And you collateralize an asset. Now, yes, you could save that money up in a savings account in a bank and use that as collateral, and so you'd still be earning your interest, right? But what is it doing for you? It's not providing any additional benefits. You still have to qualify for it. They're still going to look at your income, and if you don't pay that loan back on their schedule, they are still going to come after you if you miss a premium payment, even though they have that collateralization on that asset. There's tons of red tape and still getting that loan, so it's still going to show up on your credit report. All right. So what about whole life? We think whole life is a better answer, and the IBC concept is a better answer. It provides the guaranteed rate of return that they're looking for, the guaranteed cash value and growth. It has all the flexibility that you need. Remember, this is not your grandfather's whole life insurance policy. The flexibility is competitive with anything I've seen, and I would say even more flexible than any other life product out there. No interruption to that compounding growth because we collateralize the cash value in your policy. You don't have to qualify for that loan. You are guaranteed that loan. This is an agreement between a private company and a private individual. No government intervention is involved here as the banks have. Why is that important? Do you guys remember when during the financial crisis, and I think it was AIG got $1 billion bailout, multi-billion dollar bailout? The next year they paid their top brass bonuses, tons of money, and people had a fit. And what happened? Obama came out and said, I looked into it. It's a private contract. It was in their contract. There's nothing I can do about it. Okay, that's how powerful this is. This is a contract that cannot be broken. You also have that tax-deferred growth, and it can be accessed tax-free. When you take a loan on a whole life insurance policy, as long as it's done properly, there are no tax implications, and there are no tax implications on the distributions as well. So it goes tax-free and can be accessed tax-free. Liquidity, access, and control. We have clients who send in a policy application, and attached to that policy application is a loan application. And as soon as their policy is enforced, we process the loan request. You can get a loan from against your policy in less than 10 days, in 10 days or less, because it's all based on how quick the bank can process the checks and everything gets settled in the policy. We have no artificial limits. on how frequently you can take loans or when you can start taking them. So you have that guaranteed accessibility to those funds when you need it. Plus, you have additional benefits. Remember, I talked about additional benefits. You have a guaranteed death benefit that they're able to access. And that death benefit goes to their children and grandchildren, income tax free. They also have additional benefits that we'll talk about with no charge, and I'll talk to those about those in just a sec. But so again, you have additional points. You have no fees, no red tape. It's very simple. You have access to that money in 10 days. You can get to it when you need it, and you know it's going to be there. So who are we looking at? Who is our client? And I kind of alluded to it, $70,000 or more in a household, but small business owners really get this. They really get this. Real estate investors love it. They use this to continue to grow their real estate portfolio and build their wealth at the same time and recoup some of the interest they pay to these lenders and put it back into their own pocket. And so when I say that, what does that mean, by the way, just so it's clear? So if I take a loan, I need a loan, and I have my IBC policy established, and I'm going to act as an honest banker, a wholesale banker. My infinite banking policy is the wholesale access to cash. If I had not set up my IBC policy, my next best alternative would be, let's say, a small business loan. And you can get loans for maybe 6 to 8%, depending on the amount and the length of time you pay it back. So for argument's sake, let's say I have access to an 8% loan. My policy has a loan interest rate of 5%. That's what we charge, 5%. It's been that percent since I've been with the company. It can fluctuate, but what we do is we keep it within 1 percentage point of the cash value growth. So we guarantee 4% plus you get a dividend. Our interest rate on the cash is 5%. So we keep it tight. So my next best alternative is 8%. So instead of taking that small business administration loan at 8%, I'm going to take it against my policy at 5%. But what I'm going to do is act as an honest banker and put this whole process on steroids and pay the policy loan back as if I am paying the policy or the loan back at 8%. Right? So what does this do? This pays the loan back quicker, and you recoup those 3 percentage points that you would have paid on a small business loan. You say 3%, big deal. Well, that's over 50% less in interest. And you keep doing that over time, putting that money in your own pocket, that's how you build your wealth. And it goes back into the policy by the time you have repaid the loan, it's as if you never took it. And your cash value has continued to grow at 4% compounded annually plus dividends. And now you have more money to access for the next major purchase. So that's kind of how that works. And again, that part right there is key to this concept and recouping that interest to get your clients out of debt quicker so that they're paying less interest over their lifetime and putting that money into their own pocket. So clients who want to avoid red tape, clients who want liquidity use and control of their money, they just want access to capital, and they want to have access to it easily and when they want it. Somebody's just looking for a safe asset. These assets are guaranteed, contractually guaranteed. You can tell what the client's going to have in their policy on the guaranteed side of the ledger throughout the whole life of the policy. And if you sell to the guarantees, as we have many who do, they're only going to be pleasantly surprised to the upside when they get a dividend. Now, again, we can't guarantee dividends, but we've paid them for over 110 years straight. So in all likelihood, they're getting a dividend, and we are very competitive in the dividends right now with that substantial increase that we had in our dividend scale in 2016. Now, they do need to be insurable. This is life insurance after all, so we do need them to be healthy, but sometimes we come across individuals who aren't eligible for the life insurance, but we can find somebody in their family many times, to act as the insurable person, and then you can have another owner. And they have a desire to protect their family. Again, this is life insurance. You want to find those clients who really love their family, and they're not sick of their kids and sick of them being arrested or whatever, and they don't care about them anymore. And you want somebody who loves their family and wants to take care of them. With whole life, again, you have the guaranteed premiums, guaranteed cash value, the high guaranteed growth that's so powerful, and And by the way, when I talk about the policy features, that's just one part of this. It's what we let you do. As I was talking about before, it's access to those loans being so liberal. What we let you do with the policy, how we let you design it. Those are other keys that nobody else does better than Mutual Trust with that Horizon Value product. You also have additional benefits that you can add on. One for cost and a little bit extra waiver premium. That is a great rider. It's nominal in many cases to add it on. And just think about, how many clients we have that who are able to still fund part of their retirement plan even if they can't work. All right. How many of you can guarantee that your retirement plan is going to be funded? Well, we have a way to make sure that even when you can't work, you can still fund this portion of your retirement plan. And what's really cool is you can put it on the paid up additions rider, and we call that disability benefit rider. It's the same as the waiver of premium, but you can use it on the paid up additions rider, and that can cover up to $15,000 going in that PUA rider. So just think about how powerful that is. You have somebody who's funding a policy at $10,000 a year, $6,000 is going into the paid up additions rider, meaning almost all that's showing up in cash, and they become unable to work, do their own occupation for 2 or 5 years, or a comparable occupation after that. Mutual Trust will pay their premium, the full $10,000, even if they started having a bad year here and there and they started just funding the minimum on the PUA rider. If they're funding at the minimum, which is $100 annually, that's all they need to do to keep it going, and they weren't able to fund it at the full $6,000, and then they're paying $100 and then they go on disability rider or the disability waiver, Mutual Trust pays the full $6,000. Whatever they qualify for, that's what we pay. So again, it's a very powerful rider to add on. Plus, we have chronic and terminal illness riders. Everybody's pretty much familiar with chronic and the terminal illness. The chronic illness rider says that the client can accelerate the death benefit anywhere from 5% to 24% each year until that death benefit is depleted down to $10,000. Now, they just need to be certified by their own doctors being unable to do 2 ADLs or suffer severe cognitive impairment. That's it. We don't need receipts. They can use the money for whatever they want. And this is great for those who either aren't going to buy long-term care or maybe even can't qualify for long-term care because this is underwritten for mortality and not morbidity. So we have many situations, for example, someone had Parkinson's disease and they couldn't even get a long-term care policy. They were able to get our chronic illness rider, and that's a no-fee rider. So again, these are the additional benefits I'm talking about. With IBC, we have a dedicated coordinator. His name's Richard Weiserick. He's also our business planning coordinator. He is a fantastic resource and very smart guy. I encourage you, hopefully if you sign up through IAMS with us, you'll have access to him, and I encourage you to take advantage of him and his wealth of knowledge. We have software that you can use to run sample illustrations showing loans being paid off over and over again and the impact on the policy. We have robust training programs and marketing materials so we can help you get started. Now, regarding training programs, I mentioned to you earlier that we have a way that you can get up and running in this concept right away. We have partnered with a group that has developed the most successful selling system, hands down, that we've ever partnered with. And I'm not exaggerating one bit. I have seen advisors who adopt this system, and we're doing nothing with us to become top 10 producers. This system, if adopted, will have clients crying in your office because it gives them hope. And how many of you are selling annuities and having clients crying in your office? This is a great way to introduce whole life into your practice without changing anything else that you're already doing. You just add this in. You don't need to be a guru at this to implement with this particular system. It took infinite banking and made it developed it from a concept to a selling system. It's simple, it's powerful, it's repeatable, and you don't even have to know anything about life insurance in general to do it. They will hold your hand the first 3 cases. We support, there is a cost to the system. We support the cost. By the way, you do those first 3 cases and the system's going to pay for itself. And they hold your hand the first 3. But if you do a certain amount of business in the first year after adopting the system, Mutual Trust will reimburse you on part of that system cost. On top of that, we have a program called Education Reimbursement. You can earn up to $1,500 in reimbursement toward anything, including the selling system that I'm talking about. What I would like you to do is to think about clients that may fit this profile, which I know you have some. Set up a call with Tony. Give Tony a call, get contracted with Mutual Trust, and once we do that, we can show you what this concept is and how you can take advantage of it. I encourage you, I mean, you can do IBC without that. You can certainly do that, and we have materials on our website that can help you get started. But what I have seen many times in the years I've been doing this, there is maybe one or two of you who will latch on and go get like gangbusters because you get it. Some people just click and they get it and they take off and they do big numbers. But many of you will get bogged down in the details and you will be paralyzed by that. And it's unfortunate because then you're losing on that opportunity to make that money right away. This system will let you do that. So talk to Tony, get contracted if you're interested, and then we'll be happy to help you to learn about the opportunity and more about how you can incorporate it. If you have IBC, try, even if you don't do the way I tell you or I'm asking you to do, give it a shot. Find a client, start talking to them. Set up a call. Try it once. You do it once. If it works, good. Try it again. Do it 3 times. Once you get that 3rd time in, you're hooked. So Tony, I'm happy to take any questions. I'm just going to show you the destination we have for conference this year. We're going on a Mediterranean cruise. Obviously, it's too late for that, but we have another great destination being announced, and it is very, very reasonable to get on these conferences for first-year writing agents. It's ridiculous how easy it is. And we even double your credit the first 4 months of your production. So get those cases lined up, get contracted, and we can get you on another fantastic conference somewhere exotic or incredibly fun. It's either culture or fun with us. So with that, Tony, I'm happy to take any questions if anybody types anything in.
Okay. Can you hear me okay?
Yes.
All right. Let me switch this over because I do have a few questions that have come up. So let me switch this back over. So the first thing was I did get a couple of messages regarding someone unable to see the screen, and I did check with our IT department, and that would be a problem on the user end because everyone else was able to see the screen, and we did double check, and I had someone dial in to see that. The person that sent the message in regards to that, I'll make sure that I get you the link to the webinar once it becomes available so you can review that so you can see those slides that were missed.
So I'm sorry, was it on my end or was it just on the client?
It was on both of our ends. So it was the same individual. So.
Okay.
All right.
Okay.
And,
yeah, we have this recorded. So.
Yeah, and I did check on both when I had my end up and then when you had yours up. So.
Okay.
First question: maximum issue age.
So the maximum issue age is about 70. Now, the concept can get kind of difficult, as you can imagine, in the 60s. Not to say it can't be done, but if you're looking at somebody in their mid to upper 60s, may or may not be able to do it depending on the situation.
Okay. Next question: minimum face amount.
Minimum face amount technically is $10,000, but with this concept, you're rarely using minimum face amount. The average premium that we have is about $8,000. So these tend to be pretty big cases, especially some of the business cases can be really big. So, technically it's 10,000, but again, you almost never see that.
Okay. This is one that we get asked a lot. How can this concept work for college planning?
It's excellent for longer term college planning because as the person who asked that question probably already knows, is that when you put money into a whole life insurance policy, it disappears in the FAFSA and for most colleges. but it takes time to build up the kind of money that they might need to help pay for college. So as long as you're starting with somebody who has younger kids, it's fantastic. We tend to do some later stage college funding using a different product and different strategy.
Mm-hmm.
So that's kind of a different kind of idea altogether. But yes, for college funding for a longer term, you got some years to build that cash value up. Yes, this is great for that.
If it's shorter years, would it be more advantageous for, let's say, the parents to get the insurance on themselves, or would you still want to do that with the kid?
Typically, even if they are, if we're doing it for the child, a lot of times we're still going to use the parents. It can be difficult to get enough insurance on a child to build up the cash value that you need due to the limits on what you can put on a child. But there is another way with shorter term funding. We typically go to a modified endowment contract.
Okay.
We have college planners that run the numbers, and it still comes out much better for them to get that money hidden than it is, than the impact of taxing it later will be.
Okay. 2 more questions. First, how do I start the conversation with these business owners?
How do you start the conversation? You can talk to them about, the business that they've built. What have they done to protect their business? How are they financing, some of their activities? And just, would you like to know how to, operate your business and preserve more of the wealth that you're building with your business? So it's just about just having the conversation. We have some excellent videos on our website that will have some talking point examples on, how to talk about businesses doing this. But many times it's just having the conversation. Hey, I've been coming to your business for a while. How'd you get into this business? Do you have any kids? What sports do you like? I've discovered a concept for helping businesses like yours not only protect their business, but help it to grow even faster. Are you interested in having that conversation? So it's just a matter of talking to people. We're all secret agents, and in our neighborhood, our neighbors don't even know what we do. My wife barely knows what I do. And it's important to just talk about that, because sometimes we're ashamed of what we do and we don't want to talk to our friends about it.
Mm-hmm.
But what we are doing is powerful and important. We are saving people's financial futures. We need to be out there talking to them. So again, just having the conversation.
All right. It's kind of last one, but then a little caveat. The caveat is available in California.
Yes.
Okay. And then the last one, and I know for you guys that are still on the call, there are some additional questions. I'll make sure to get those answered as well after the call. How do dividends come into play when we're talking whole life versus IUL?
How do dividends come into play? So with whole life in particular versus IUL, with this concept, most of the cash value growth is guaranteed growth. So I mentioned 4%.
Mm-hmm.
The dividends add another 1.2 in this environment, percentage points.
Mm-hmm.
So if you are looking at, again, it's not just the rate that you're earning, it's what is that rate being multiplied by in your cash value.
Right.
So if I multiply 0 times 8%, the result is still 0. With the way we build our policies, you have cash value growth immediately. So our little 4% is being multiplied by something right away. You also have the dividend that is adding on to that. So this isn't ever going to be a discussion about how quickly you can grow the cash value. It's about, I need to know it's going to be there. I need to know I can get access to it without surrender charges. I want it to grow quickly and be there as soon as possible, so I can get this rolling, the strategy rolling as quickly as possible.
Okay. All right. That'll be the last question. And again, for those of you that had additional questions, I'll make sure to get those answered for you. Just have a couple of polling questions to get out, and then we'll go ahead and end the call. If you would like more information regarding the topic that we discussed today, I am sending out a polling question right now. If you could please answer that, I'll make sure to get additional information out to you. And we got quite a few people that want more information, Kip, so that's a good thing.
Great.
Okay, I'm going to leave this up for a little bit because it looks like a lot of people are responding. Okay, a few more seconds. Let's go 10 more seconds and then we'll get to the last polling question. Okay, it looks like pretty much everybody has responded. So, and the last polling question, if you'd like to get contracted through IAMS, I am sending out that polling question. Please respond. I'll make sure to get the appointment information out to you. I'll leave this up for a little bit. Give everyone time to respond. A few more seconds here. Okay, we'll close that down. All right, and with that, Kip, thanks again. It's always a pleasure doing these webinars with you. And for everyone that has attended, appreciate you joining us on our first webinar of the new year. Kip, do you have anything else to add before we complete the call?
I just want to thank everybody for taking time out of their busy schedule, and this is a great way to start your year, looking at a new opportunity. And I want to thank IAMS, as always, for hosting this call. And Tony, it's always awesome working with you. Just good luck to everybody. Happy selling.
All right. Thank you, everyone. You guys have a great week. We'll talk to you later.